Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Ed Rosenberg. Ed is the head of ETFs at American Century Investments. Ed, great to see you. Thanks for joining me.
Thank you for having me.
So Ed, tell me, how can your investment philosophy / active management help investors to navigate market volatility?
So let's think of what we do as a firm. We're a fundamental bottom-up active manager, almost across the board with most of what we do. And so in this type of environment where the markets are jumpy, the portfolio managers have the ability to shift as needed when they want to, right? And look at their investments every single day and adapt to what the market's doing. And I think in that type of environment, the active approach is actually more important than ever.
Okay, so now tell me, do you have a favorite ETF in your lineup?
So I do right now. For this environment, we have a ticker, it's Multi Sector Income ETF, or MUSI is the ticker, MUSI. I think for what they're doing, it's a fixed income product that's investing in investment grade, high yield, even emerging market or bank loan. The portfolio managers have the ability to shift their investments to generate a higher yield or a shorter duration in a rising rate environment, which we've seen that we've been in for the past few months or 6 months. And so by something like that, you're actually able to generate yield without suffering too much on the actual price dropping with the duration being too long.
All right, so Ed, let's talk a bit about growth versus value in equities.
So it's interesting, right? We've been in a value market for a while, right? And this value market has been out there, but there is ways to go into growth, right? So you've seen the big tech companies, they're the ones that have taken the hit, but there's other ways to look at it. So I'm gonna throw another product in there because we have a quality growth product that actually limits the ability, one, to invest in those big tech companies. It caps everything at 3%. So when they perform bad in a growth product, it performs better. Right now, when they perform great, it's going to underperform. But when you think about it, when you're looking at growth versus value, there's been some interesting ideas that we're in this value market, but you should stay away from growth. And if you're looking for growth, there's a way to go in, but you have to go in the right way. Right? You can't look for the high flyers in this type of environment. You need to look for companies that make sense and can move forward.
All right, Ed, wonderful to talk with you. And that's ETF Leaders, powered by the New York Stock Exchange.